the latest variant of the coronavirus, the threat of inflation, all of this is having an impact on investors' risk appetite. So are these going to be the catalysts that mean that gold has a much stronger finish to 2021 than it's managed for much of this year? In this video, I'm going to go through the levels to watch. Hello, I'm David Jones from Capital.com. I thought we'd do an update for gold going into December. The recovery that started off the August lows, I think, is still going. So I think there could well be some scope for further gains into the year end for gold. So as usual, in this video, I'll talk about some of the recent news around gold, the levels to watch, then we'll jump back onto the platform, look at the charts in a bit more detail. There's a couple of trades running at the moment and see if there are any other opportunities. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue to push out lots of different content on the various topics we cover month in and out. Plus, of course, every Friday at 2:30 UK time, I now do a live stream direct from the YouTube channel. If you're subscribed with the alarm bell notification pushed, you get an alert just as we're about to go live. Right, let's get into it. Take a look at gold in a bit more detail. So overall for this year, it's been a sideways year for gold, sideways to slightly down. And at the time of recording, it's down a few percent year to date, the price of gold, where of course we've seen plenty of other assets, stocks, crypto, to name just two, have had a pretty good year overall. A disappointing year for gold investors. But we have seen a good recovery over recent months. And during November, the price of gold traded up to levels not seen since the summer. So we saw a 5-month high for the price of gold. It's been knocked back since then, but I think that recovery is still going. One of the things that could attract people to gold as we get into the end of the year is, of course, inflation. We've talked about it before. The latest US inflation reading came in at 6.2%, and that saw its fastest gain in a 12-month period since 1990. So I think it's fair to say investors are getting concerned about inflation, and gold is seen, or has been seen over the decades, as one of the ways of hedging against that inflation risk. Plus, of course, we all know in the last few days, the latest strain of the coronavirus has emerged. And I think this has knocked investors' confidence when it comes to risk. Just last Friday, we saw the largest one-day fall for the Dow Jones Index for the year to date. So the biggest one-day fall in 2021. I think exaggerated by the fact it was a half day because of the Thanksgiving holiday. But I think investors are maybe readdressing their appetite to risk. Again, this is something, if concerns stay at these levels and increase, that could see the price of gold lifted into year end. So this is why I think it makes it an interesting market, perhaps probably the more interesting times we've seen for gold this year. It has been a dull one, but the recovery is still going. It has been knocked back a bit from those 5-month highs, but is this a buying opportunity? Let me talk about some of the levels to watch, then we'll jump back onto the platform and take a look and see what the trade could be. So for me, the immediate hurdle on the upside comes in around $1,815. After that, we've got the 5-month high from earlier in November coming in at 1,877. So there's still 1,900, I think, as I've said on previous videos, is still a bit of a line in the sand on the upside for gold. So I think we are going to have to be a bit patient if we're waiting for $2,000 plus. On the downside, I think we're not far away, or we haven't been far away from important support from November and actually the end of October, coming in around $1,760, $1,777. So as usual, to put some color on these numbers, take a look at this recovery. Let's jump on the charts. So let's kick things off with a chart for the year for gold. So here we go. So ended 2020 trading at just below 1,900. And here we are just coming into well, December ending November trading below 1800. We have seen it's been a volatile year, no real direction at times, but still slightly down overall. Let's take a look at a couple of trades. So here are two trades I've got running on gold. So one from the 20th of October. It was really more of a longer term position. I was going to try and run into 2022, buying in at 1778. And another one from, I think, the last video we did when the price was trading near 1900. I put an order into buy at 1820, so that's been filled. So overall, slightly down on these two, but nothing really too over dramatic. Let's take a look back at the charts. So first of all, let's take a look at the RSI. So as usual, 10-day RSI, overbought, oversold indicator. The last signal we had off the RSI was when, I think we were doing the last video, when it was pushing up near that 1900 area. And I did say back then, perhaps we could see it run out of steam. We know this has been a problem going back to early June. These old 1900 plus levels, it has struggled up here. We've seen the price sell off and get knocked back. The RSI was overbought back then. It hasn't quite gone oversold, the RSI, in the last week or so, but I suppose it's as near enough to oversold as perhaps doesn't make too much difference. What's important for me, I think, is the price action really on gold at the moment. So if we picked up on the August 2020 highs, that all-time high up around $2,075 an ounce for gold, those sort of levels. We've been in this correction for a long time. I suppose if we were going to be aggressive, we could say that the moves we've seen in November have broken out of that correction. Finally, that correction is over. Long corrections don't normally end overnight. So we could see, I think, perhaps a bit more to and fro, a bit more choppiness for the price. But it's definitely, I think, the most positive it's looked in recent months, gold. And the reason I got that latest buy position on gold, and this is what I think, perhaps going into year end, is this recovery that's been going on since the August the 8th low, since the flash crash we had in gold. Let's zoom things in. So we had that sharp sell-off at the beginning of the week, if you can remember back then in August for gold. But since then, we have had this recovery. So we are almost 4 months into this now. We've got higher highs, higher lows. We've got a definite trend in place. Interestingly, the sell-off, it's been a fairly flat few days for gold, but it has continued to hold above this trend line. So for me, levels to watch on gold now, the most immediate level, the low hit over the last couple of days, around 1,777 an ounce. Then we've got bigger support. If I was doing a trade now, the absolute closest I want my support below these lows from early November, they're coming in at 1758. And then bigger support again, back around 1720. So we've got this whole band of support running from 1720 to about 1780 for gold. And this for me is the reason I'm bullish into year end. Okay, perhaps not madly aggressive in terms of targets, but I don't think it's too much to expect. Perhaps a run back up to have a look again at those old November highs coming in around 1877, that sort of area on gold. So I'm thinking that perhaps we will see something of a recovery from here, assuming these old supports are going to hold. I think if we see 1720 get broken on the downside, the risk is this correction from August 2020 is still going. But overall, watching this recovery now into year end, can we have a run back up to 1880? If we can break there, then again, the target for me would be a run back up to those early June highs. So moderately positive. Perhaps we have seen the worst of the decline is behind us now, and seeing if it can just recover slightly again to the end of 2021. That's it for this update in gold. We'll see if it can push a little bit higher again during December and record perhaps at least a positive finish for 2021. We'll come back, we'll do an update. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.